Hey, everybody, what if I told you that one of the most promising cryptocurrencies right now might actually be getting held back intentionally? Sounds wild, right? But stay with me, because what's happening with Kaspa might change the way you think about crypto market fairness altogether. The data, the signals, and even the community behavior are starting to reveal a pattern that's hard to ignore. So, let's take a deep dive into what's really going on behind the charts, because something isn't adding up, and Kaspa holders are starting to notice. Now I get it. Every time a coin doesn't move up as fast as people hope, someone starts shouting manipulation or whale suppression from the rooftops. But when you start connecting the dots, the narrative around Kaspa begins to look a lot less like random noise, and a lot more like a strategic holdback. The question is why? And more importantly, what happens when the pressure finally breaks? This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with the obvious. Kaspa's chart has been frustrating, to put it mildly. Holders have watched it move sideways for months, stuck between the same price zones, while other projects pump 50%, 100%, or even 300% overnight. Meanwhile, Kaspa seems frozen in place, almost as if someone hit the pause button. And yet, beneath that flatline, the fundamentals keep getting stronger. That's the paradox that's driving people crazy. Now, people in the Kaspa community have been incredibly loyal. They've been patient through all the dull trading days, the dips, and the endless "when moon" comments. But even the most dedicated holders can only take so much. Because there's a difference between patience and stagnation, right? You can hold with conviction, but conviction doesn't mean being blind. The market has its cycles, but it also has its games, and many believe Kaspa is being played. Imagine this. Someday, Kaspa hits 50 cents or maybe even a $1. People who never paid attention will start saying, "Wow, you were so lucky to buy at 7 cents. Lucky? Really? Was it luck to watch your investment crawl sideways for 9 months while everything else soared? Was it luck to lose a bit trying to time a bounce only to see the price freeze again? No, that's not luck. That's mental endurance. That's conviction under pressure. That's having the stomach to believe in the fundamentals while everyone else chases memes and hype. That's what separates disciplined investors from short-term speculators. It's the willingness to hold when it's boring, because boring, as history shows, often comes right before something big. Here's what most traders miss. Behind those sleepy price candles, Kaspa's ecosystem is actually accelerating. The launch of Kasplex, its Layer 2 platform, has quietly boosted on-chain activity. New decentralized applications are going live, more wallets are becoming active, and network participation is trending upward day after day. The metrics look strong, really strong. So while some people call Kaspa's chart dead, the reality is the exact opposite. The network is growing, the user base is diversifying, and developers are continuing to build. Sometimes the best signals aren't in the price, they're in the fundamentals that price hasn't caught up to yet. And when that happens, we know what comes next: explosive revaluation. It's almost poetic, right? The most undervalued projects are often the ones working the hardest in silence. Kaspa fits that description perfectly. Now let's talk about something more concerning. According to community data, around 4 billion Kaspa coins are still sitting on centralized exchanges. That's a huge number and a potential red flag, because as long as coins remain on exchanges, they're vulnerable to both manipulation and sudden sell pressure. The saying, "not your keys, not your coins," isn't just a catchy phrase, it's a survival rule in crypto. If your Kaspa is sitting on an exchange, you're trusting a third party with your future, and history has shown that's a dangerous game. We've seen exchanges freeze withdrawals, delay transactions, or worse, collapse entirely. So ask yourself honestly, have you moved your holdings to self-custody? If not, what's stopping you? Because true decentralization isn't just about technology, it's also about personal responsibility. And speaking of exchanges, the movement of large wallets has caught the community's eye. Recently, one of the top wallets, ranked 7th by total holdings, transferred over 6.2 million Kaspa to Kraken. That could mean several things: profit-taking, portfolio reshuffling, or preparation for a short-term sell. Whales don't move that kind of size without a reason. Now, whale selling is usually seen as bearish, but not always. When big holders take profits, coins get redistributed into the hands of smaller retail investors. Over time, that spreads ownership and can actually make the network stronger. So is whale selling a red flag or an opportunity to accumulate more while prices are low? That answer depends entirely on your time horizon. Short-term traders panic. Long-term believers buy. Let's get into some technicals, because this is where the story gets really interesting. Analysts like Whales Crypto Trading recently pointed out that Kaspa may have broken out of its descending channel on the daily chart. If that breakout holds, we could see a move toward 19 cents, which would be a serious morale boost for everyone who's been sitting through months of consolidation. But here's the catch. Breakouts only matter if they're confirmed by volume. Too many times, we've seen Kaspa and other coins fake a breakout, pump for a day or two, and then crash back into the range. So before we celebrate, the market needs to show follow-through. A breakout without conviction is just a setup for disappointment. Meanwhile, analysts like Fireblade have identified a critical support zone between 6.86 cents and 7.2 cents, a level that could define the next phase for Kaspa. If this zone holds, it might mark the bottom before a reversal. If it fails, lower retests could be on the table. Either way, this range is crucial. It's the battlefield where short-term traders and long-term investors will clash. Let's talk price targets, because this part always sparks debate. Can Kaspa really hit $1 soon? Some people say yes. It's only a matter of time, but most analysts aren't convinced it'll happen in 2025. The more grounded projections put Kaspa's potential range for this cycle between 25 cents and 50 cents, depending on broader market conditions. That might sound underwhelming if you're dreaming of a moonshot, but in percentage terms, it's still incredible growth from where we are now. There's another factor worth considering: Kaspa's lack of venture capital backing. That's both a strength and a limitation. Without VC money, Kaspa avoids the centralized control and artificial pumps that often plague other coins, but it also means slower growth, smaller marketing reach, and less liquidity. It's the trade-off of staying true to decentralization. The project is pure and community-driven, but it's also up against an industry where hype often moves faster than merit. Long-term thinkers, however, see this as a good thing. They'd rather have a steady, organic rise built on real adoption than a quick pump fueled by exit liquidity. Some even predict Kaspa could reach $20 over the next decade if the technology and ecosystem continue expanding at their current pace. Ambitious, sure, but not impossible. This is a long game, and long games reward those who can wait. According to analysts from Fox Wolf Capital, Kaspa is expected to close this market cycle somewhere between 25 cents and 45 cents. Again, not life-changing for someone looking for 100x overnight, but it's exactly the kind of move that turns early accumulators into millionaires down the line. The strategy here isn't about chasing tops. It's about accumulating consistently when prices are low and sentiment is dull, then selling into future hype when the world finally catches up. Think about it. The coins that feel boring now are the ones that feel obvious later. Bitcoin, Ethereum, Solana, every major success story started with people being bored and skeptical. Kaspa could follow that same path. The fundamentals line up, the network is growing, and the decentralization ethos is as strong as ever. Let's zoom out to the weekly chart. Analyst Sam Han has been closely tracking Kaspa's macro structure, and here's what's going on. The price has been consolidating for several months, trending lower within a descending channel after losing momentum from its 2024 rally. It's now hovering between 7.3 cents and 7 cents, right at a key demand zone. Technically, Kaspa is still in a corrective phase, but there are hints of exhaustion. The RSI is flattening near 40, showing that selling pressure may be fading. The MACD is also tightening up, with the potential for a bullish crossover soon. If buying pressure returns this week, that could spark the first real reversal signal we've seen in a while. Key resistance levels sit around 8.15, 9 cents, and 9.5 cents, while the main breakout target is around 10 cents to 12 cents. On the flip side, if the support fails, The next historical demand sits between 6 cents and 5.5 cents. In simple terms, Kaspa is at a make-or-break moment. A weekly close below 7.3 cents would likely confirm continuation of the downtrend, while a rebound above 8.1 cents could mark the start of a genuine recovery. This is where patience and precision come into play. It's easy to get shaken out in these zones, but often, this is where long-term winners are built. Another underappreciated metric: decentralization. According to the latest reports, most of Kaspa's public nodes are spread across the United States, Europe, and Southeast Asia, with over 300 active nodes worldwide. That's a big deal for a project this size. Every new node strengthens the network's resilience and makes it harder for any single entity to control or censor activity. This commitment to decentralization is one of Kaspa's greatest strengths. It's not just talk, it's real. More nodes mean more security, more stability, and more legitimacy in the eyes of true blockchain believers. It's proof that Kaspa isn't just another speculative asset, it's infrastructure being built for the long term. So, what do we take away from all this? Kaspa's price may not be thrilling right now, but that doesn't mean the story is over. Far from it. The fundamentals are improving, the network is expanding, and technicals are aligning for a potential shift. Whether or not the coin has been held back is up for debate, but one thing is clear: this project is building something substantial beneath the surface. If you've been holding through this long, you already understand what conviction looks like. The key now is deciding whether you still believe in the vision. Because at the end of the day, markets reward those who prepare quietly, while others panic loudly. Kaspa might not have the flashiest marketing or the loudest influencers, but sometimes silence is the sound of something powerful getting ready to move. So, whether you see this as manipulation or just the calm before the next storm, one thing's for sure: Kaspa's story is far from finished. The real question is, will you still be here when the rest of the world finally wakes up to it? Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.